All right. Good evening, everybody. Hopefully, everyone's having a good time. And coming at you a little bit late tonight, 11:08 p.m. I know these aren't super consistent exactly. Sometime past 9 p.m. I'll typically come on, but I'll try to always like get on and give you what I'm seeing. So, we had a really interesting day today. If you recall, during the market review on before today, Tuesday, I didn't have an idea of which way it could go. There was liquidity above, there's liquidity below, and so let's take a look into that. We're going to take a look into that today, but let's take a look into market prep for tomorrow, and we'll do a market review of what we're looking at and what happened today as well. So let's head over to the charts. So so we see on the daily that there's a daily chart here. We see a couple of key things here I want to point out. So if you recall, before this week, I anticipated this forming here from Monday's price action over to Wednesday's price action now. This candle has started lower, but if you go back to the weekly review on Sunday, outlined exactly this occurring. I anticipated this staying open for the time being, and I anticipated us taking out the daily liquidity here. Now, what ended up happening is ended up trading down to this monthly premium BISI high, and it continued upwards. What else was there? Well, it didn't quite make it past this low of August 29th of 15,247. What did it get to? It got to 15,248.50. So this is liquidity being engineered basically here. So that's super important to keep that level written down and keep this imbalance written down as well as we enter FOMC. So a couple things that I'd look for. I'd look for evidence that if we don't take out the midpoint of this wick, the consequent encroachment of this wick, we might go to the midpoint and then head upwards for FOMC and then back downwards for the latter half, the second run of FOMC. Or if in Asia and London we continue downwards, we take this out, we take this liquidity out, we might wait for FOMC to take that liquidity out, or it might happen before then and then head upwards. It might even go downwards to this volume imbalance first and then head back upwards. It is kind of difficult to see during FOMC weeks because it happens mid-week and later on a Wednesday. It's kind of difficult to see what exactly the bias is for this week. In general, I'm looking for larger move to the downside, which is why I'm thinking we will head upwards first for FOMC. And then once the announcements get done, and Powell's done, half an hour, 45 minutes after, I anticipate the larger prolonged move the rest of the day. Generally, continuation in the downside area. So that's what I'm thinking for the next FOMC day. Let's see how the price plays out, and we'll go from there. So you know these two areas of liquidity, keep them in mind. They're very important. So let's head down and take a look and see what happened today. So today on the hourly chart, let me zoom out a little bit so you can see a little bit more. As I said in the morning, based on the week's open and the price action there, I can see that Asia had a high here. So I was looking for this to be broken, and we will get into that in a moment. But for now, let's just leave this as buy side liquidity. And I had a ton of meetings today, so unfortunately I could not trade today. Made a whole grand total of $11. So sometimes days be like that, I guess. And so remember, I'm waking up in New York, so I'm waking up around this time here. I actually did not have time today to monitor the charts, but this is what I was looking for as I woke up, and then I had to eat. So I missed this move. That's okay though. Let me point out a couple of other things here. So down here, you had sell side liquidity, right? Here. So in the morning, even before New York Open began, there's a lot of liquidity here that you can take a look at and aim for. And remember, before New York happened, this happened in London. So we had a rise in London. We created relative equal highs. We broke that and rejected on the hourly, all before New York Open. And then New York Open continued downwards to take out buy side liquidity, or sell side liquidity. And what else was down there? More sell side liquidity from the day before. So what I did note as well is up here, there's a rejection block that never got hit. It couldn't get down there. Not that it didn't, it could not. Price was not allowed to get up to that point. So when we go down into lower time frames, this is going to be really intriguing to see how important these levels are. Now we'll go into what these pink lines are in a moment, because that actually was very integral for the latter part of the day. But I'm not going to go through those yet. So stick around, listen for that in a moment. I'll get into that. Okay, so here's the 15-minute chart, right? So as you can see, when it got up to that level, it took it and it started to bounce. Couldn't quite tried one more time to squeeze out some weak shorts at 7:30, and then 7:45 started to move back downwards to take out this relative equal low. So you could have aimed for that mark, 15,440, all the way down to 15,380, 40 points, pretty hassle-free. I think that's what I would have looked for if I was able to pay attention and trade, but unfortunately I could not. So with this candle here, we see that it's a pretty markedly sharp drop down on the 15-minute. So let's take a look and see if there's anything on the lower time frame that could have keyed us in as well. So we're going to go down to the 5-minute now. All right, so on the 5-minute, we see liquidity taken. Now, yes, we did have this area above here, but we would have gone into this knowing that it failed to reach that rejection block on the hourly. So we see it's having trouble getting above here, still having trouble. Short-term low, high, low, higher high, lower low. So what does that make this? Let's zoom in a little bit so you can see. I'm gonna make this a lot larger so it's easy for you to see this, okay? So these candles here serve as what's called a bearish breaker on the 5-minute. So we have that here, and this is what I look for when the market engineers liquidity here. They engineered liquidity here with this high, so they went down, they took out some of the longs that started going there, and then they went back up, took out some of the shorts that went short here, took their stops, and then went long. And you see this displacement here. This is the indication that we have institutional sponsorship here. So if I zoom out a little bit more, you can see we had displacement below this low here, and we start to see that we've got continuation back up into it. It comes back up into this fair value gap that's within a breaker, breaks down, breaks down, breaks down, heads to this liquidity and rockets through that liquidity there. So yes, during open we did see a nice move downwards, a nice move upwards on the 5-minute. This would have scared out a lot of people, as those are nice like 10-15 point moves, maybe 20 point moves actually. So that would have taken out a lot of people who had tried to enter during the breakouts, and that's exactly what it's meant to do. But on the grand scheme of things, we see that it went past a weekly order block, which it looked like it was going to get bought up there, and it tanked down to that monthly level. So having these key monthly levels there, very important. So we see how important those are exactly. And from there, once that monthly level occurred, we start to see some short-term highs being broken here, return to an order block, further movement up, and then we see a little bit of consolidation here to the monthly, and then we see the rise back up. Now, this movement is going to be very interesting to talk about, but let's go into the 1 minute first to see if there's anything else we could have seen within those time frames that keyed us off. All right, so remember, that's that breaker that I mentioned at the New York kill zone. And you can see that there's a short-term high, short-term low here, short-term low here, short-term low here even, which is broken. So remember, price will look like this. And now we see that broken there, right? And that's a pretty sizable displacement. So on the 1 minute, we see there's a few entries that we could have gotten in. And again, this is an even smaller breaker here, as well as this one. Low, high, low, higher, high, boom, displacement, back up, breaker. So it gives you one last chance here, and then off to the races. Even if you went in at 15,425, that's still a solid 80 or 40 points there. So this fair value gap, I forgot to mention, I think it was on the 15-minute. Let me see. Yes. So one thing I forgot to mention is this fair value gap was quite important throughout the rest of the day. I had that marked there the whole stream. So and I think when we go down to the 1 minute, we can take a look and see. So I had that marked the whole stream, so that could have been a form of liquidity there. Price continues downwards. We see that on a higher time frame, you'll see that there's a ICT 10 a.m. entry, silver bullet entry, but then we get down to that key monthly level, and we start to see some price action moving away from that monthly. Yes, we do touch it again, get close to it there, but afterwards, when we see these higher lows continue to form and continue to form over time, that's when I started taking a look, and I noticed that on our real-time hours chart, this is the hourly or our 5 minute, we started to notice that, hey, there's this liquidity void up here that's within this kind of like breaker here. It's not filled yet, right? So we anticipated that there's some room back up here. Now, unfortunately, I was in meetings all day. I could not take this, but as you can see, pretty simple there. It bounced off that daily BISI low and continued upwards. So what does it do? It runs straight through that 15-minute fair value gap. And let me go back to this chart, and we'll go on the 5-minute chart so it's a little bit easier to see. So we can see that it ran up to this. Now this turned into an inversion fair value gap, so it ends up retracing a bit and then finishing the day at, lo and behold, the new week open gap. So that's what I saw on price action today. I think that tomorrow, again, looking at the hourly, we do see some liquidity up there. On the hourly, there's certainly a potential breaker up here for price to come back and retest during one of the FOMC runs. I would favor a run up, maybe a return back down into this fair value gap here that got formed at the monthly. I would favor a return back down here during London, a take of these buy side liquidities, and maybe a little bit upwards if we can. Because if we take a look at the dealing range that we're in right now, we get a rough estimate that this is where equilibrium lies. So what would be right above it? Well, new week opening gap. What would be right above that? Well, there's another fair value gap up here, and a breaker, and a smaller, lower time frame fair value gap up there that we could then take to the downside and get a more prolonged move. So that's what I'm gonna be looking for tomorrow. And if I'm fortunate enough to be out of meetings to take a trade, I don't know if it's gonna be possible, but that's what I'm gonna be looking for tomorrow. So let me know if you have any questions down below, and I am gonna call it a day for today. Nice quick market review there. There's a lot of concepts in there. Take your time. Ask me if you've got questions about these concepts. I've been studying ICT's concepts for almost a year now. It will come October, end of October, it'll be about a year, and I'm just now starting to see clarity surrounding it. So hopefully you can learn faster than I have, but it's been a wonderful journey and I enjoy doing these. So if you like this, give it a thumbs up, and yeah, give me a subscribe if you want to see more of this content and get notified when I release this content. So with that, I am going to call it a night. So again, happy to answer any questions. Just let me know. I know there's a survey that I need to respond to. I'm going to create some content for that eventually. I just haven't gotten time to do that because I was away celebrating my friend's birthday over in LA this past weekend. So it's fun getting out on a boat. So and let me know if any of you are watching from LA. But with that, I know, and actually there was one thing that I saw recently where my Forex funds, another prop firm, recently got they got hammered by the CFTC because of what they were trying to do with the prop firms. They were mishandling client money, very, very much so. So I didn't really enjoy what they were doing. So I saw that they recently got slammed. If you go to the website, they're no longer operational. So kind of sad, but that's why I work with Apex and only Apex right now. Yep, I think with that, I'm going to close it. So have a great night, and we'll see you tomorrow, and good luck trading.